oppose the bill because I think its fundamental assumption is inaccurate. This bill basically says that the reason there isn't more lending in the area of manufactured housing is because businesses are not allowed to charge people more. In fact, they're saying that consumer protection is the problem. I don't think that's the problem at all. I think that the consumer protection is what's keeping more money in the hands of people who need every penny. And so I think that when someone buys a manufactured home, they should pay an interest rate that is consistent and commensurate with the risk of repayment. Buyers should not be steered into high-cost loans by a salesperson on the lot. When someone buys a manufactured home, they should be warned that if a loan is 9% above the average prime offer or APOR, borrowers should be told that these are high-cost loans. If a borrower is going to pay 14 or 15% interest, they should be told that there are cheaper options. They should receive ownership counseling. The borrowers should be warned that such a high-cost loan could result in harm and result in them missing payments, defaulting on their loan. And before we enacted Dodd-Frank, financing for manufactured homes was notoriously predatory. Dodd-Frank created the Consumer Financial Protection Bureau and gave it the authority to protect home buyers from abusive, deceptive, and unfair practices. But we know that in 2015, the Seattle Times published an incredible series of articles about how Clayton Homes preys on manufactured home buyers. The investigation showed how people buying a manufactured home from a dealer might go to a lot, pick out their home, and then be steered to 3 or 4 different lenders. Sounds like choice, but it's really the illusion of choice. Because those lenders were all owned by Clayton Homes. Clayton Homes, based in Tennessee, is the largest seller of manufactured homes. Clayton Homes is also the biggest lender for manufactured homes. And according to the Seattle Times, buyers were steered to lenders like Vanderbilt Mortgage and 21st Century Mortgage without ever even being told that Clayton actually owned them. So what looked like comparison shopping was really just the illusion of choice. What it was is monopoly pricing, which is a real serious problem in this economy that I wish Congress would take much more seriously. Former dealers also told of how Clayton Homes pressured them and provided incentives to retail outlets to get buyers to choose Clayton Homes. Clayton loans are particularly expensive when compared to those of its peers. And the Seattle Times investigation showed how the company locks in buyers and loans at interest rates that exceed 15%. And 15% makes that loan a high-cost loan. Based on the interest rate levels from 2013, Clayton controlled 93% of the high-cost market segment. The slide up there on the screen shows a heat map of loans made above the level which requires counseling for high-cost loans. The benefits of this bill would go to Clayton Homes. The benefits of this bill would go to Clayton Homes and basically no other lender. The industry's second largest mobile home lender, Wells Fargo, didn't have a single loan in that high-rate pool. Thanks to Dodd-Frank, high-cost loans to manufactured home buyers are rare, but they won't be if this legislation passes. The new duty to serve requirements from the Federal Housing Finance Agency will provide even more affordable financing to these buyers, and now's the time to keep hard-fought protections for manufactured home buyers so that they can buy homes that they can actually afford. So I ask folks to vote no on this bill. I commend people's intention to do something for manufactured home borrowers, but this is not the right way to go. At the end of the day, this bill allows salespeople and dealers of manufactured homes to steer buyers to lenders, raises fees, and raises interest rates to 8.5% above prime offer rate for mortgages and 10% above prime offer rate for chattels. And that is not a good thing for the consumers of America. So let's get back to the drawing board. If you want to help folks in manufactured housing, I'm there for you. I believe in it. I have a lot of manufactured housing people in my district, but this is not the right way to go. One of the issues I'm very concerned about this, and I really join members on both sides of the aisle to really focus, is this problem of monopoly power. We know our country from the days of Republican Theodore Roosevelt on up to the early 1980s. Both parties said we want to promote competition, and we don't want to allow any player to get so dominant that it hurts competition. I can't imagine how both people on both sides of the aisle will disagree with that. But Clayton Homes is a monopoly that controls not only the market for manufacturing homes, but the market for manufacturing home financing. In 2003, after Clayton was bought by Berkshire Hathaway, it moved aggressively to swallow up Clayton's competitors. Today, Clayton operates under 18 different brand names. I think they're up there, giving consumers the illusion of a competitive full choice when in fact it is always Clayton pulling the strings. Manufactured housing is a perfect example of how our country's market concentration is a serious problem. And it's across various industries, including the financial services industry. Here we have a holding company that uses subsidiary companies operating with different brand names to create an illusion of choice for consumers. In reality, all these different products, apparently offered by different companies, but they're not different, are controlled by one body. Who wins in this scenario? Well, if you've even taken Economics 101, you know that the monopoly always wins. The monopoly company in this case, Berkshire Hathaway, Clayton Homes. Who loses? Working people trying to buy housing. You want to know why there aren't more players in the market? There's a lack of market concentration. You want to know why there aren't more competitive rates? Lack of competition. Anti-competitive behavior makes it easier for corporations to exercise predatory power with no recourse. We should be discussing how to make it easier for families to own manufactured homes. We should be discussing how to make it easier for an entrepreneur to enter this space so that they can compete with Clayton Homes. But that's not what we're talking about. We're just making it easier for them to charge more monopoly rates. We should have a hearing on duty to serve requirements for manufactured homeowners. We should have a hearing on the FHA programs for manufactured homeowners. I have 4 bills that help manufactured homeowners. I am dedicated to helping manufactured homeowners. Instead, we're talking about how best to reward Clayton Homes for his predatory behavior, which is what I believe this bill represents. The Seattle Times published an incredible series of articles. I urge everyone to read them. Even if you believe that H.R. 1699 is great legislation, please read Seattle Times. Just do it so that you can rebut me. I'm happy to do that, have that debate with you, because I think we all want the same thing, good outcomes for homeowners, manufactured homeowners.